Let's also get you a street view in at this point in time. G. Chokkalingam, Executive Director and Chief Investment Officer of Centrum Wealth Management joins. And Chokkalingam, hi afternoon and wish you a very happy Diwali and a prosperous new year. To start off with, the kind of moves that we are seeing today on the back of, global news impacting our markets, and we are purely playing a catch-up to what transpired yesterday. Does it seem like this phase is going to last us too long? Because European markets, they started off okay, they've completely flattened out. So, clearly it's an indication that perhaps today's move done and yesterday we may not be able to sustain at these levels.
Hi, good afternoon and thanks for the greetings. We firmly believe that the worst is over for Indian equity market, and we have been impacted by what has been happening in the European economies. Now, even the development in Europe is on expected line as far as our view is concerned. Let us understand the fact that we don't have any structural issues like what European economies have. And in fact, on the contrary, I am seeing a couple of positive triggers to help Indian market to sustain this recovery. And I am very optimistic that in 2012, the Indian equity market is going to be one of the best performing equity markets in the world. My conviction comes from the fact that, let us not worry about the inflation rate right now or the interest rate cycle. One, the interest rate cycle has peaked out, and the inflation also will start going down. As I have been saying in the past, there is no structural problem like oil crisis or drought or war. We have only problem on the food crop fronts, the food price inflation front, but let us not forget the fact that they account for only less than 20% of the total inflation basket. Now coming to the triggers, I see two more triggers in the immediate future. One, I am expecting the rupee to appreciate anywhere from 5 to 9% in a stable manner. And second, in the winter session of Parliament, I am expecting a lot of reform measures to be implemented, because there has been a lot of criticism on the government saying that there is a paralysis of policies. So it is high time that the government will wake up and implement all pending reform measures. So these are the two major, and also third fact is that the kind of stimulus package we see in the Western world, ultimately the money has to flow back to emerging economies like India and China. So that has a lag, maybe about 3 months to 6 months down the line. We can expect flooding of a lot of money. So therefore, I have the view that it's going to be one of the best markets in next 6 months to 9 months.
Mr. Chokkalingam, afternoon, Neeraj here. What is it that you would now look to add to your portfolios? I remember you were bullish even before this happened. What are you adding on? Would you add the beaten down names, infrastructure, capital goods, because they haven't moved, or stick with the leaders, that is auto and a couple of other pockets which have performed exceedingly well in the last 2 months?
We have added only some stocks from the metal and oil producing companies, because we are waiting for the quarterly results and also for clarity on the Western Europe front. Now we have got a lot more conviction and confidence. So the flood of money will inflate the price of oil as well as certain select metals. So we added Kain India and Hindustan Zinc. We advise our clients starting from a couple of days back to start aggressively buying these stocks. This is only new addition. Otherwise, we maintain our positive view on private sector banks, automobile, and some of the cash-rich PSUs and some mid-cap ideas where we think we can create a lot of wealth.
Chokkalingam, how are you reading into the way the metals pack is moving? I mean, most of these stocks are hitting anywhere between 5 to 10% moves today. Is it just a technical move, or is there some fundamental news which is actually triggering this kind of move?
In my understanding, fundamental always plays a crucial role, whether it is equity market or any other asset class. But the very disturbing fact is that the speculative element starts overplaying over and above the fundamentals. So that happens whether you are talking about currency or stocks. So that's what happening today. So I would rather wait for some cool off in some of the select metal stocks. However, I would continue to buy the stocks where the potential is huge, but the run-up is not by same extent, like Kain India and Hindustan Zinc. Otherwise, I will wait for a couple of more days to see whether there is any technical profit booking in those other metal stocks, and then only I would start accumulating them.
Give us some names, Mr. Chokkalingam. What is it that you'll be bullish on, one from the metals pack, and two, if you were to add any banking name to your select top buying list?
In the metal space, I would go overboard on Hindustan Zinc. Because the zinc has got a very positive correlation with the global growth, on which I am now more confident. Kane India, and then probably I would look at companies like Sterlite Industry, but I would wait for some opportunity in terms of tactical buying. In the banking space, we have been aggressively buying Yes Bank, which has helped us a lot. And apart from Yes Bank, I would be choosy about the banks which have got a very low CASA ratio. Because the deregulation of saving bank deposit rate would be very positive for particularly the banks like the old private sector banks, namely the Karur Vysya Bank and City Union Bank. Their CASA ratio is around 20%, 20-23%, and they would be the major beneficiaries because historically these banks have been getting very high yield on advances, whereas very low saving deposits. And by sacrificing even 200-300 basis point hike in the interest rate on saving bank deposits, they can reduce the share of term deposit in the total deposits. So that way they can bring down the average cost of funds substantially. So these are the old private sector banks which will be the major beneficiaries. In the large cap space, we would still continue to add Yes Bank for every dip. That's another bank which has got a very low CASA ratio. Otherwise, for time being, I would stay away from the banks which have got a very high CASA ratio.